The Federal Reserve is expected by market consensus to cut rates starting September. How is this going to impact markets, specifically Bitcoin, and to some extent the stock markets we'll talk about as well with our next guest, Jake Boyle. He is the Chief Commercial Officer of Caleb and Brown. Jake was on the show a couple of months ago, and he had correctly called the floor for Bitcoin. So I'm interested to get his take on what's next. Welcome back to the show, Jake.
Thanks for having me. Good to see you again.
Good to see you as well, Jake. All eyes are on what the Fed is going to do next and how their actions may dictate market performance. You made a very good call. People should check out our last interview from a few months ago. Back then, Bitcoin was still much higher. It was at the time its then all-time high, close to $73,000 a coin. And you were talking about the potential for a pullback down to what you called a $50,000 floor based on the fact that a lot of customers on Caleb and Brown were placing buy orders and limits at that particular level. That turned out to be a very good call. The lowest I've seen this summer was around 49,000. So that was an excellent call. Let's talk about before we talk about what the Federal Reserve is going to do next, let's talk about what customers at Caleb and Brown are doing now, because that seemed to be a very good indicator.
Sure. Well, funnily enough, customers at Caleb and Brown are mostly talking about the Fed and the US election, which won't really come as a surprise to anyone. We used to talk about market cycles, 4-year cycles, Bitcoin halving events. Those were the main catalysts. And now that with the institutional support that has come with Bitcoin over the course of this year, Bitcoin now has far more parity to traditional industry, from which point it is the geopolitical affairs and the larger affairs that are dictating what people's attitudes are on the market.
Federal Reserve, let's talk about that. So they're expected to cut. First of all, any surprises you're expecting, or do you more or less agree with the consensus expectation that we're getting one cut in a couple of weeks?
Yeah, I would agree with the consensus expectation. I think Polymarkets has it priced at 65% chance of a 25 basis point cut. Now, if history repeats itself, if that all goes ahead, we probably will see a short euphoria moment for Bitcoin. It's happened in the past, it'll probably happen again. But it'll probably be a buy the rumor, sell the news situation. Maybe Bitcoin rallies to 65K, maybe even 70K. That would be quite nice. But once that is done and dusted, we're left with a bleak economic outlook and a lot of uncertainty for a US election, to which Bitcoin will probably retrace those gains pretty quickly.
Well, this is an interesting point you bring up, because there are different dynamics to a Fed cut. I've heard the argument that a Fed cut is actually a signal for a weaker economy, which in theory shouldn't be good for risk assets like tech stocks and Bitcoin. On the other hand, lower interest rates may mean more liquidity, which may mean more interest for risk assets in Bitcoin. Where do you stand on this debate?
Yeah, there's definitely a lot of ways of looking at it. As we currently stand, Bitcoin has not decoupled from traditional risk-on asset classes. So fortunately or unfortunately, however you want to look at it, Bitcoin is likely to move in accordance with the rest of the broader market. So any geopolitical changes, any Fed cuts, whatever the case may be, how the broader market reacts, the S&P 500 and the like, is likely just going to push the direction for Bitcoin as well. I'd love for Bitcoin to have complete parity, segregated as a complete asset on its own. I just don't think we're at that level of maturity in Bitcoin adoption for that to be the case yet.
Let's flip over to my screen. I'm going to show a chart for you. This is the Bitcoin price. Let's just zoom into this year. The Bitcoin price has been kind of correlated with the NASDAQ at some points in time, right? Recently, that correlation has reemerged. So there's one argument that if the NASDAQ reacts to the Fed, Bitcoin is going to follow the NASDAQ. I've noticed an even stronger correlation with the Russell 2000, which is to say small caps and medium cap stocks in the US. And that may be explained by the fact that the large caps, the NASDAQ has been driven by a few names like Nvidia, which they've moved on their own. What do you think is the strongest driver for the Bitcoin price right now?
Yes, well, Bitcoin remains a correlated asset, especially with tech stocks like you've mentioned. And there's another chart which I'll share with you, which really details that a lot. However, it's worth noting that Bitcoin is ambidextrous in nature. This is a fairly new phenomenon with recent adoption. So what I mean by that is Bitcoin is typically pegged and aligned with major, the S&P 500, the NASDAQ, and various other, mechanisms that we can compare it with. It moves in alignment with that the majority of the time. However, in the last 1 or 2 years, when there's been more adoption, more transactional volume with Bitcoin, we have seen periods of time where it has actually decoupled from these kind of metrics that it's often compared with. One example is the war in Ukraine. Another example is the fall and the calamity with Silvergate Bank. In those periods of times, there was a tech stock sell-off, yet Bitcoin rallied. So what we're really looking for in the future is, with more institutional support, more adoption of Bitcoin, and I'm sure we'll get into this shortly, more of a regulatory favorable environment for Bitcoin and Bitcoin companies. I can see a scenario where Bitcoin is decoupled from these traditional metrics, and we can see it move in its own accordance and at the beat of its own drum.
Another chart I want to share with you here. Once more, this is Bitcoin year to date. I'm going to add a gold chart here. This is the series showing gold US dollars per ounce. And as you can see here, over the past couple of months, for the first half of the year, there seems to have been a fairly consistent correlation, which is to say, gold, traditionally viewed as a risk-off asset, has coupled with gold, Bitcoin, which is seen as a risk-on asset. This correlation has now broken down since the beginning of August. There's been a decoupling. What do you make of this decoupling?
Yeah, I think it really depends. It just depends on the nature of the investor and the time of the market. So Bitcoin's extremely liquid, of course. It's very easy to buy and sell as a result of that. And also the critical piece is its price performance. Now, Bitcoin is often coupled with gold and it can perform in alignment with gold. But if someone has to sell down an asset right now, today, someone has to sell down an asset, more of our clients would probably look to sell down their Bitcoin positions when they're up, 200% over the last 18 or so months, thereabouts. They're going to sell that before they sell their gold, which is the number one safe haven. As much as we'd love to be Bitcoin maxis and stuff here, let's be real, gold is still the safe haven at a global investor standard. So naturally, I do think that Bitcoin gets those sharp sell-offs a lot more than gold does. And obviously, with the lower market cap, it's more impactful on the price too.
Michael Saylor was on the news not too long ago. He said that the US dollar could be backed by Bitcoin. This is not something that's happened ever before. Without going into the details of what he said, could this be possible, you think?
I think a statement such as the US dollar can be backed by Bitcoin is a very heavy statement to make. It's a very optimistic statement to make. As a Bitcoin investor myself and someone who's financially incentivized for Bitcoin's growth and adoption, I'd love for that to be the case. I just think that the industry at large and the market and the resources and the infrastructure around Bitcoin, how it's been adopted at a household level across the world, it's just not at that stage yet where we can kind of realistically expect something like that to happen. I think it'll be something where it's small and steady adoption, and then all at once. One day it explodes and we all look like fools for thinking otherwise. If we do get more government support for Bitcoin, if it does fit into the bill of what makes a country's reserve, that would be fantastic. We have seen early signs of that in other countries. I hope to see it in the US, but I think we're looking at a few years ahead.
This is the tweet I was talking about here. Michael Saylor says, nothing is more American than privacy, property rights, and a dollar backed by Bitcoin. And he tweeted a video of Senator Cynthia Lummis appearing on Fox. Now, Senator Lummis, as you know, was the one that proposed or passed forward a proposed legislation for introducing a Bitcoin strategic reserve following what President Donald Trump said on the campaign trail, that he said he would introduce a Bitcoin strategic reserve if he were president. So let's talk about this idea of a Bitcoin strategic reserve. What impact would it have on the Bitcoin market, on the price, if any, if it were to be introduced?
I think a lot of Bitcoin maxis might not like it because we see this time and time again when regulators and governments get exceedingly involved in the crypto space, it does take away from those kind of root origins of power to the people, a decentralized means of money which goes beyond governments. Now, if the USA, the biggest economy in the world, has a reserve in Bitcoin, you could form an argument to suggest that it's not actually good for the inherent cause of what's allowed Bitcoin to rise. Bitcoin was born on the back of the GFC. Let's remember that. That wasn't very long ago. It was born on the back of the cronyism which plagued the traditional industries and the traditional ways that we view money. So you could form the argument that it wouldn't be good. However, Bitcoin in this day and age is more influenced by institutions and large investment vehicles than it is by OG Bitcoin maximalists from 10 years ago. Whether people like to hear that or not, that's just the reality of the situation. So I do think that it will have a positive impact on price. Bitcoin will certainly skyrocket in price if that was to happen dramatically. We'd probably go well over $100,000 per Bitcoin. But we'd have a few people on Twitter complaining about it, saying it takes away from the origins of what Satoshi wanted.
Yeah, do you like the idea of a government entity or just the treasury owning Bitcoin and controlling Bitcoin? I mean, presumably, wouldn't they have also the ability to move the price if they dump the Bitcoins into the market if they wanted to?
Yeah, I agree. I agree. What I've been attracted to in Bitcoin and what a lot of our clients that we work with have been attracted to is it does have that power to the people. You have that fiscal liberty, as a lot of people kind of call it. Now, if the government has greater influence over the price dynamics of Bitcoin, it does take away from that. And Bitcoin starts to become less of this dynamic, wild 21st century invention with this great backstory with Satoshi and the kind of movement behind that. It takes away from that and it starts to group Bitcoin in with just traditional assets, which are regulated and easily available and not really unique to anything that we're used to over the last 100 years.
Well, let's go back to the markets before we talk about some more longer term trends. Let's, I don't know, hypothesize for a minute. Let's just imagine a scenario in which Bitcoin reaches $100,000 by the end of the year, and then we can do the reverse scenario. What scenario would that be? What would take us there, hypothetically speaking?
Hypothetically, and without stretching beyond what's probably quite realistic for the rest of the year. So let's say we get that Fed rate cut in a week or two from now. If that happens, we get a little sugar rush in the market. That's great. People will probably sell into it. We've been seeing people selling into all these pumps, particularly with altcoins recently. I don't think that will change. We then probably will get humbled for a little while. And then leading up to the election, if there is a Trump administration, Trump has been excessively vocal about Bitcoin. He's obviously got RFK alongside him now too, who is even more bullish on Bitcoin. I think that will result in an environment whereby, that change in political power has historically caused rallies in markets. I believe that will happen again. I think there is a chance we could hit 100K Bitcoin on the back of a Trump administration. Maybe that's a little overzealous on my part there, but I think that if anything is going to cause 100K Bitcoin, I think it'll be the election season.
Do you think the Harris administration would have any significant impact or change in the price or adoption?
Look, the Harris administration is likely to be an extension, in my opinion at least, it's likely just to be an extension of what we've seen for the last 4 years, right? We've quite literally got the vice president going to president in that case. So if that's what's to happen, I think we retain Gary Gensler, which a lot of people in crypto are not going to like. We retain tight regulations. We retain uncertainty on what the outlook looks like for how is the US going to be a leader for crypto adoption? Are we going to be empowering industry leaders like Coinbase and the like? Probably not. You could steelman the argument and say that a Harris administration would result in tighter regulations, which ultimately will protect consumers long term. So we don't see another FTX or a Celsius or anything like that come from the USA. You could form that argument but that would be a long time horizon. And people in crypto don't want that horizon, I don't believe.
All right, let's give the bear case then. So we're currently at about 55, $56,000. When we spoke earlier in April, actually, the highs were in March. Back then, it was close to 73,000. That's about a 23% decline since its highs in the springtime. What takes us down to another 23% decline? In other words, down to 42, 40,000.
So I think one of the biggest ones is probably just geopolitical uncertainty. Of course, we've got tragic events occurring through Ukraine and the Russia conflict, and of course with Palestine and Israel. If there was to be exceeding problems in those jurisdictions, and if greater war was to break out, that will have tremendous shockwaves throughout risk-on assets like Bitcoin. I also believe that if Harris is elected and the Democrats retain office in the USA, that will take a lot of the spotlight away from crypto. A lot of momentum this year after the ETFs, after the halving event, what's really driven Bitcoin after those two major catalysts has been Trump being so outspoken about being pro Bitcoin. That has rallied things on several occasions. If we're to get 4 years off Kamala Harris, specifically to Bitcoin, I don't think that will be good. Not in the short term, at least, whilst we're in this period of economic hardship.
Okay. I want to shift gears and just mention stable coins for just a minute. Let me read you this article from Reuters. So dated April 23rd, 2024. Venezuela to accelerate cryptocurrency shift as oil sanctions return. So as you know, earlier in the year, new sanctions were imposed on Venezuela. The U.S. Treasury Department last week gave customers of Venezuela's state-run oil company and providers until May 31st to wind down transactions under a general license it did not renew due to a lack of electoral reforms. Anyway, what the Venezuelans did in response is that PDFSA, the company in question, since last year had been slowly moving oil sales to USDT, a digital currency also known as Tether, whose value is pegged to the US dollar and designed to maintain a stable value. The return of oil sanctions is speeding up the shift, a move to reduce the risk of sale proceeds getting frozen in foreign bank accounts due to the measures the people said. So what's your initial reaction to, this development?
I think it's a great opportunity for people to engage in the utility of stablecoins. Like stablecoins are one of the most black and white, obvious use cases of blockchain technology. Now, if we're in periods of time where politics is getting out of hand and you've got smaller countries like Venezuela who are in many senses going to be, you could say, victimized, impacted, however you want to look at it, by larger players and geopolitical concerns. If they have the ability to engage in stablecoins and move away from this old SWIFT system and the bureaucracy and the politics that plagues money markets like that, good on them. I'm all for that.
We don't know why the Venezuelans chose Tether, but can you speculate as to why they didn't use Bitcoin for the exact same purpose?
Well, I mean, if people are predominantly engaging in this utility of blockchain for the purpose of replacing an old, dated, easily sanctioned and frozen mechanism of sending dollars, as we know it through the banking system and the SWIFT system, migrating to a stable coin like Tether or USDC, which is extremely liquid. I mean, Tether's more liquid than the vast majority of assets on Earth. There's only a very small handful which are more liquid. Now, that makes sense. You're still getting US dollars. You're just getting the optimization and efficiency of 21st century blockchain technology instead of 1980s or however old the SWIFT system is, probably much older. If they were to use Bitcoin, you'd be subject to price volatility. And as much as we want to be bullish on Bitcoin, we want to see that adoption, there are numerous scenarios where stablecoin pegged against the US dollar is more logical than using Bitcoin directly.
Okay, well, let's finish off in the markets before we talk about Caleb and Brown. So, as we discussed previously, there seems to be still a very strong correlation between the stock markets and Bitcoin. So, let's talk about the stock market sentiment towards stocks and risk assets overall right now. Do you think the risks are skewed to the upside or downside, given uncertainty around the elections, given uncertainty around geopolitical risk, like you mentioned, the war in Ukraine, but also optimism following a or surrounding a Fed cut? Where is the sentiment right now placed, do you think?
I think the sentiment is largely bearish, more so than it is bullish. Look, the reality is it depends tremendously on short-term data sets, jobs data, rate cuts, election. The economic outlook can shift on a monthly basis. In the environment that we're in right now, sensitivity is higher than ever. We see that time and time again leading up to election periods. It really all comes down to that. Where we currently stand, though, the harsh reality is that the US economy is in a fairly dire situation. And you can't, whether it's Trump or whether it's Harris, that is just an objective reality that is going to remain. We can't print ourselves out of that, stimulus ourselves out of that. There are harsh realities that need to be faced, and there will be major sell-offs during this period. We probably will get a sugar rush with Trump if he's elected. We probably will see a lot of stocks boom. But then as we get into 2025, well, we have a larger outlook and a fairly butchered economy that needs to be saved. And that's going to cause a lot of sell-offs.
I've asked this question to several people. Why am I not using Bitcoin when I shop at the mall or McDonald's, for example? I mean, the payment system technology is there. It's just not being adopted. Why not?
Well, the adoption of Bitcoin has been more as a digital gold, more of a store of value, a safe haven against geopolitical tension, a safe haven against overbearing political systems where sovereignty of your wealth is something which is in debate. During COVID, we had so many examples in countries like Australia and Canada and the US where people were questioning, that money in my bank account, how much sovereignty of that do I actually have? So we've seen periods of time where the investor narrative has shifted towards Bitcoin being a long-term reserve for your portfolio. Bitcoin is like the digital version of the blocks of gold bullion that you've got in the safe that you've had for decades and you've forgotten all about. That's the way that our clients see it. We've been around since 2016 as a business, and in 2016 through to probably 2021, most of the conversations we'd have with investors was about Bitcoin being something with a means of transaction. So yeah, hey Jake, when am I going to go to the mall and buy my overpriced Starbucks coffee with Bitcoin? Those conversations have really dried up, and I think that leads a lot of opportunity towards other blockchains and other cryptocurrencies to fill that void.
Let's talk about Caleb and Brown's offerings. Well, first of all, the customers of Caleb and Brown, what projects or coins or cryptocurrencies are they interested in right now? Are you seeing a surge in something else besides Bitcoin?
We actually have. I hate answering these questions and just saying Bitcoin is a bit boring, right? But we've actually seen a lot of people investing in Aave. So what we've found is during this bear market period, the altcoins are not in a bull market. Bitcoin has been in a bull market and had a lot of great price action. Altcoins have just been diminished. It's a bloodbath. Now, this slow death that altcoins have had, what it does is it means that investors can't be just chasing new narratives and pumps. It's not meme coin season anymore, right? What that means is investors have to look to utility. Which products out there are demonstrating product market fit? Now, Aave has been quite impressive because, we've seen the fall of Celsius, we've seen the fall of centralized lenders. DeFi works. DeFi continues to work. It hums along. It doesn't have this downtime. Things are looking good. Now, Aave has generated more revenue in recent months than it has during peaks of 2021 alt season, where you'd assume that it would be generating significantly more revenue. So a lot of our clients, they're looking there at a lot of research. They're speaking to their broker internally, and they're trying to find which altcoins out there have a future. Maybe it's Chainlink, maybe it's Aave, maybe it's Maker. A lot of it is DeFi protocols that generate revenue so they can sustain growth over time. But it's certainly the vast majority of altcoins are not what our clients are looking at right now. It's a very select, targeted few, with Bitcoin being the main investment in their portfolio.
Speaking of altcoins versus Bitcoins, you're right. Let me flip over to my screen one more time. This is a chart showing Bitcoin dominance, which is the percentage of the total crypto market cap that is just Bitcoin. And it's been rising steadily over the last, not just year, but year and a half, basically since 2023, late 2022. What's instrumental behind this rise of Bitcoin dominance from 40% all the way to 57%?
The largest variance, I think, just has to be the institutional adoption of Bitcoin. Like the ETF inflows are obviously a large one there. And the reality is Bitcoin, we talked about product market fit for Bitcoin, it's branded. It has its place to stay. It's been trialed and tested. It's been around for over a decade now, and it's retained its position in the space. It's attracted a lot of investors who are not interested in cryptocurrency as a whole, but they are interested in exposure to specifically Bitcoin. Altcoins have inflated market caps. They have tokenization and governance, which doesn't necessarily click with larger institutional investors. It doesn't meet their risk profile. If you want to talk about things like Sharpe ratio, a lot of cryptocurrencies just don't fit the mold there. Bitcoin does. It has the institutional support, the transactional volume. It's been trialed and tested through various market cycles, and it's got leadership and direction that the US has really propagated over the last few years, and our clients love that and investors love it.
What needs to happen to bring capital back to the altcoin space?
Retail needs to get money, and retail does not have money right now. And that's the harsh reality that people are not talking about enough. Retail does not have any money. We don't have those COVID stimulus checks going through. We don't have people opening up these aggressive longs on shitcoins. That era is well and truly in the past. Altcoins are predominantly led by mass retail influx of people chasing the next 10, 100x. which everyone so desperately wants. Institutional money is not really chasing 100x on an altcoin. It's chasing long-term capital growth on sustainable investments. Hence, Bitcoin dominance has increased. And until we do have the means to which retail can get more involved in the space, I don't think altcoins are going to have, particularly not your average altcoin, they're not going to do that much.
So right now, all else being equal, are you more bullish on Bitcoin than you are on the altcoin space, or at least the meme coin space?
Yeah, full disclosure, I'm personally more invested in Bitcoin than I am in altcoins and certainly meme coins. I'm envious of people who caught those meme coin pumps. As much as we try to be rational investors here, we see some of those gains. We think, damn, missed the boat there. A lot of our clients took great profits there. So, I'm very happy for them. But look, where we're at right now is Bitcoin as a market leader, Ethereum simmering, disappointing a lot of investors, but a lot of people are very hopeful. And then altcoins are fighting for dear life with the ones that have product market fit, potentially having a good future. But a lot of them, they're just going to get sold into the ground, I think.
I'm curious to see how Kamala Harris coin is going to do following the election. If she wins, maybe it moves. The Trump coin
Honestly,
went down. Yeah,
the political meme coins probably have more rationality to try and take short-term trade positions on
sure.
than a lot of overly inflated, ETH killers and stuff out there.
Yeah,
Not financial advice.
right. No, of course not. Tell us more about Caleb and Brown. We talked about what people find interesting and popular on the platform. Tell us about the platform itself.
Sure. So one of the things that we're focusing on, so Caleb Brown's a brokerage. We work with clients in over 100 countries worldwide. What we do is we offer a white glove premium solution. So much like you have a broker for property or commodities, we offer a brokerage solution that's 24/7 with no cost to speak to your broker for cryptocurrency. So that way people can engage in the space using far more complicated entities. They can wire funds and trade on receipt on Christmas Day. We're not going to have dynamic spreads. We're not going to have withdrawal limits. And it's really just a personalized service. So you're not having to wait for support ticket number 1,500,000, which is often the case with a retail exchange. Now, what we've been working on recently during this period, we're focusing on offering more banking and fiat rails to on and off ramp for clients. We've got bank accounts that we use from Liechtenstein to America, Switzerland to Australia, you name it. And what that means is clients who have more complicated entities, who need their lawyer, their family office, their accountant, their assistant across their crypto investments, they can go through that complex investment mechanism with us, and it's a really easy process. And if they need a withdrawal or deposit millions of dollars, or if, hey, altcoins run up dramatically and someone takes a huge win, we want to make sure that they're getting that professional, reliable service to get the cash in their bank account and the best price on the coins.
I wonder how has a failure of FTX impacted or changed your strategy, if it has had any impact at all?
That's a good question. The fail of FTX was a disaster for the space. It was a disaster for the market, and there is really very little positive that we can try and pull out of that situation. It should have never happened. In saying that, for Caleb and Brown, we gained a lot of customers because our fees are higher than FTX. They're higher than the average exchange. We're a premium service, our fees are more expensive. But in saying that, a lot of people, they're now looking at, well, what custody solution do you have? What quality assurance can you give me? Can I actually speak to someone there? Can I come to your office and meet you? Can we get dinner together? Can we talk about our investment thesis? What kind of reserves do you hold as a company? All these questions did not exist in the euphoria of a 2021 bull rally. Those questions absolutely started to get asked after the fall of FTX, where a lot of investors, particularly those with larger sums of capital who are in more complex investment vehicles, they start to care a lot about this stuff. So they became less fee sensitive and more service sensitive. They demand a high quality service, and we can provide that.
I remember a couple of years ago when I was covering Celsius, which also collapsed. My personal friends were asking me, how do I know if I put my money into a Celsius as an example? I'm just using it as an example. I'll get my money back. Well, it turns out if you had did that, you wouldn't have gotten your money back. So I'll ask you the same question. How do we know that there are sufficient reserves and we'll get our money back if we use Caleb and Brown?
Yeah, yeah. It's a question everyone needs to ask with whatever service you're using in the space. So
Sure.
we don't offer lending or staking first and foremost. So we're
Okay.
not financially incentivized to hold any customer assets. Now, we do offer a custody solution. We partner with Fireblocks and we've built a very robust mechanism where clients have isolated wallets that are offline. We're not using an exchange hot wallet for clients or anything like that. And that's fantastic for people who don't have confidence in their own custody solutions. In saying that, if you want to withdraw it to your own wallet, we'll help you test your ledger. We'll get your ledger set up. We'll help you test it. You'll get a phone call for every withdrawal. We can tailor security on your account dramatically. And as a result of that, we have nothing to gain from holding your assets. We use our own company liquidity to execute trades. So we actually empower clients to self-custody. And we're really happy when people are empowered with their wallet solutions and their broker can help them out there. So, when an exchange is not allowing you to withdraw coins, if you're not getting a yield on your assets and they're not telling you if they're maybe getting a yield on your assets, or you look on chain and the coins are moving from wallet all the time, they're the kind of red flags to look out for. We have nothing like that. We're a very simple service.
All right. Well, where can we learn more from you and Caleb and Brown?
I will throw a link at the bottom. If anyone wants to reach out to me directly, my email is jake@calebandbrown.com. So pretty stock standard email there. And yeah, there's no cost to speak to us or anything. So love us or hate us, reach out anytime. It won't cost you a dime.
And I'll put a link down below. Click on that to learn more about Caleb and Brown and their offerings and their platform and brokerage services. Thank you very much for your time today, Jake. We'll speak again soon.
It's my pleasure. Thanks for having me. Cheers.
And thanks for watching. Don't forget to like and subscribe.